If we can take a moment to sit quietly and imagine being in the eye of a hurricane, something that's so powerful and destructive and chaotic. But it is actually said that the eye of the storm is the calmest and the quietest. Now, that's how I equate the current market volatility. It's very chaotic at the moment, but as investors, our job is to find the time to focus on what we're really trying to achieve and to buckle down and really put our energies in learning more about the companies we're investing in, because only then can we sit quietly in the eye of the storm and be at peace with ourselves. I cannot emphasize enough how important it is to do your research. Find great companies, find strong companies, put your money in them, but only after you are confident in what you're doing. Okay, I've said this many times over. Very important. A great book I once read spoke about Mr. Market being a lunatic who offers you some crazy prices from day to day. So today, Mr. Market might give you a reasonable price or a highly overvalued price, and tomorrow Mr. Market might wake up in a different state and he might offer you something else at an even lower price, which would be a bargain. Now, it also speaks about you taking the opportunity to take advantage of Mr. Market's offerings at ludicrous prices. That's your job as an investor, to find those points in time where Mr. Market is offering you something at a crazy, ridiculously low price. That's where you get your highest return, because the first principle of my approach is to invest in companies that are offering a service to the public that's going to be beneficial to the wider world. And with that comes as a secondary money. They will make money as long as they're offering a service to the world that is beneficial and in the best interest of the public. We can look at countless examples with the Apples, the Googles, the Microsofts, the Amazons of the world. They offer the public a service that really helps to benefit the wider society, and with that the money comes, and the money comes in truckloads. Okay? So, as simple as that. The objective is to make money, but we also want to be aware of those other things. Now, you should not see market volatility as a bad thing, because it's actually really good in giving great investors the opportunities to pick up companies at those bargain prices that they might not be able to get them at otherwise. Now, I remember different points in time where I've taken a look at the current stock price of some of the companies I currently invest in, and I think to myself, I really do not want to take another position because I'm already doing so well. I don't want to bring my averages down. Now, that's more a psychological thing, but when you end up looking at the current price versus what you bought at previously, it sort of turns your mind off and you think, maybe I should just wait a little bit. But what I see now is just those same great companies that I wanted to buy a few months ago, they're basically down at levels much lower than what I wanted to buy at before. Now, the way I invest, if you know anything about my investing methods, is I put my money in every single month. No matter what happens, I put my money in every month. It could be as small as £10, it could be as small as £50. Whatever I have, I put some little money into the market, into companies I already hold, as a way of saving. Now, why is this market volatility so great? Because if investors have done their homework, they would see great opportunities where everyone else fails to see those opportunities. And that should be your primary objective as an investor. Go out, find those great opportunities, and put your money in them. Not hoping, but at least having factual information that gives you the confidence in what you're trying to execute, and also what those companies are trying to execute, because those two things need to be in line. What are you trying to achieve? What are those companies trying to achieve? As long as those two things align, then you're good to go. No, I always strongly emphasize picking great companies and learning about those investments that you're going to make, whatever it is. Always learn about them first before you put your money in. It will be greatly beneficial because it's just very easy to lose focus when everyone else is saying to go in a particular direction and you're doing something else. You'd always get people trying to pull you here and there, telling you that what you're doing is wrong. And you need to remember those fundamentals about what you've researched about those specific investments, and that will help to keep you on track. Because I find that helps me a lot when I hear people talking about, say for example, decided to invest in a little bit of Bitcoin, and people tell you, oh no, go for those smaller coins, that's where the money's going to be next. But what ends up happening is those people end up chasing after something while you've already done your research. So if the market has some volatility, you're not then forced out of your position because you have no confidence in it. Always remember, if it's built on a weak foundation, collapse is much easier. So you build your strong base with those core companies that you've done a lot of research in. There's nothing stopping you from having a few wildcards in there that you haven't done as much research in. But you can have your core base and you can have your wildcards in there. So you can mix and match and just give it a little bit of flexibility, but that comes with experience. You become better, more efficient at finding great companies, and that can really help you to improve on your journey. Take time to take a look at some events that have happened in history similar to what we're seeing today, because they can give you lessons that you can apply. They won't be the same, but you can apply those similar learnings to what happened then to now, and it also gives you some kind of foundation on which you can process your thoughts and digest some of that information. It can help you to refrain from taking tips from teachers, your barber, your friends, your family members. It can really help you not to take everything they say without doing your own research. Not because someone else got lucky in a specific thing means the same thing is going to happen to you as well. So there are people who I know and have heard about personally who've been enticed into buying into specific cryptocurrencies or some stock that they got told about that they should go ahead and invest in now because now is the time. That's always a warning sign, because the first thing you should probably ask them is, okay, why should I invest in that company? What's the fundamentals of that company that made you decide to invest in them? And if they cannot deliver that to you in a way that you can intake and make use of mentally, then it probably isn't the right investment for you. So just always be aware of things like that. If they come to you and give you those kind of statements, then always come back with a question, just so you can understand where the thought process is, because they might be giving you some useful information about the company that will take over a particular industry or completely change the world. So do not ignore that information, but just take it and ask the right questions and do your own research. That will help a whole lot. So these are the kind of fundamentals that we need to take it down to, and applying a little bit of common sense as well. You want to obviously stay away from weak companies because they're most likely to go bankrupt. They're more likely to go under. They're more likely to fail. Stay away from them. If someone comes to you tell you about MySpace now, oh, go and invest in MySpace. I think MySpace is mostly defunct now, but I'm using an arbitrary example. Go and invest in MySpace versus Facebook. It's clear which one is the winner now. So I would never go and invest in a company like MySpace in 2021, where Facebook has already beaten nearly every other social media network. As a matter of fact, Facebook is the biggest social media network on planet Earth today. As simple as that. Looking at the fundamentals, Facebook is a cash cow as well. It brings in a lot of fresh capital that the company then can use to innovate. Okay, so these are the simple common sense techniques you need to apply. Just a little bit of common sense. To summarize what I spoke about in this video, I spoke about a few different things that I see happening in the market at the moment, and how you can just take some time to focus to improve on your current strategy and to think about your job as an investor, what the real long-term objective is, sticking to some of those fundamentals that I've spoken about many times over, picking strong companies, doing your own research, digesting the information, and to improve on them. I also spoke about different points in time where you might get influenced into making a certain investment, and to really take yourself out of that situation. And if there's someone asking you or telling you about a particular investment that they think you should make, then you're free to ask them the reason why they think that is the best investment. And if they can give you a reasonable answer that can justify that, then you can go off and do your research. And if you find a positive outcome in that from that research, then yeah, by all means go ahead and invest. But go through those steps first. And just one takeaway I have for you, I would really like you to think about what your job is as an investor. And I would say, remember, your job as an investor is to find great companies, to invest in them for the long term, to stick with your strategies, your fundamentals, filter out a lot of the noise. It takes some time to focus on your strategies. By the way, before I close, I just want to quickly mention cryptocurrency. I did a video on cryptocurrency. I did a video on Instagram. I didn't publish it on Facebook, but I did it specifically for Instagram. In that video, I cautioned people about the importance of doing their own research. And thankfully, it's a good thing that some new investors can experience a pullback in the market, because at some points in time, it does feel like people become too confident in their own abilities. So you need reality checks every now and again to remind you that you really do not know what you're doing. I don't know what I'm doing, because there's no guarantee that any particular investment we make is going to yield a positive outcome. So we always need to remember that we're not really above the market. Reality is reality. Your own imagination is your own imagination. You should never put your own expectations on a specific investment, because you can be hurt really badly. Someone like myself, I've taken hours and hours to learn about what blockchain technologies might offer to us in the future, so I can sleep at night happily and peacefully. If my investments go from $1,000 all the way down to $500 overnight, I can sleep peacefully, because I know that these investments that I've made are highly unlikely to be affected by just one moment in time, unless some once in a lifetime event happens. Okay, so always do your own research, always pick strong investments to make and execute on those ones. Anyways, thanks for watching again. Tavis Livity out.